Good morning, good afternoon, and good evening to all of our crypto fans out there in the world. You have your notorious hosts of the Deep Q Cast, Robert, Carlos, and Matt. Gentlemen, everyone with their morning beverage. We're doing a morning edition today, so unless those beverages are spiked, I'm assuming they're mostly caffeinated. Although, Carlos, I remember the last time we talked a while ago, you were drinking a mushroom concoction. Is that the same thing that's in that cup today?
Same thing. My Nebraska card is about to get pulled. I'm drinking mushrooms. Although it's a Friday, so I've got a little bit of oat milk in there. Just to keep things a little spicy.
Oh, I love it. Always a fan.
Because he's such a fun guy, right? Dad joke time.
Boom.
Early morning. What you got over there? Matt's in Florida, so he's just drinking. He's hydrating. It's hot down there.
Oh yeah. I just met an alligator on the road running, so I'm hydrating and trying to get the fear of God back out me.
That's Matt's fitness coach, just making sure he's staying one step ahead. Motivation.
Incredibly big teeth.
That is wild. We see rats the size of alligators here in New York, but not alligators themselves. Speaking of,
probably with teeth to match as well. Can you actually breathe in New York yet?
It was very Blade Runner on was it Wednesday?
Yes.
It was 3 p.m. I ran out to grab lunch in the afternoon. It was like around 1:30. I was maybe outside for 15 minutes, and I could feel like this slight itching sensation in my eyes, and I coughed once, and I was like, maybe it was placebo, but I was like,
It felt like we were dealing with like making s'mores or some shit like that. It was sort of insane. I had this I think I walked away. I went outside briefly on Wednesday and walked in and being like, oh god, I fucking smell like a campfire, and not a good way either. Like a carcinogenic campfire.
It's like living in a hookah.
Yeah. So it's always fun.
Yeah,
it's definitely
crazy.
Enjoyed that.
The thing that blew my mind was that there are cities that are even dirt. Like it said, like New Delhi was actually more polluted that day than New York City, and I was like, that was shocking.
Wow.
Yeah, that was shocking.
Well, especially considering I read somewhere, and someone can fact check me on this because my source was like a infographic on Instagram, which everyone knows is true and factual,
obviously.
But like when the air quality was that bad, like basically going out unprotected in New York City was the equivalent of smoking like a half pack of cigarettes. So
perfect. Just like
without the nicotine high.
Yeah. all the
just downside. It's all downside.
The carcinogens without any buzz. It's great.
Yeah.
Boys, we have a pretty packed show. I mean, it was a pretty busy news week. Just like SEC coming out firing with lawsuits against Binance and Coinbase. It's pretty wild. I know that Coinbase. I think the SEC served Coinbase a Wells notice previously, so this might have been kind of like a little bit long time coming. But I mean, the thing that was, I thought a lot of the notes put in by the SEC with Binance were pretty interesting, just to see how the operations internally have been going over there. So I know there's a lot to discuss. Maybe you could touch on a little bit of Binance and Coinbase, some of those lawsuits, and then touch on a little bit more on the regulation, because I know there are some regulations being proposed around how to structure laws for cryptocurrency firms and assets, and then maybe touch on a little bit more on like the rates and the CPI side of things, some stuff that I know is all in your wheelhouse, guys.
Yeah, I think it's actually reasonably interesting to not focus too much on the actual content of the SEC's. We will, but like the content itself, I actually think took a backseat to the delivery. And I guess let's lay the groundwork a little bit. Sunday night, we actually saw a pretty marked sell-off. You can imagine we're actually coming off of reasonably good news, right? One could argue that they're, from a macroeconomic perspective, sort of primed for a leg higher in risk assets. And we get sort of like a sudden sell-off in the middle of the night, both in Bitcoin and Ethereum and other crypto assets. I remember waking up on Monday And, Matt and I have our weekly risk meeting and be like, oh, this is weird. Someone must have had like an algo to do that went awry or whatever. Like, this is probably, a buying opportunity because, it's just like an unnecessary sell-off. And then suddenly
especially out of the debt ceiling as well, right? So we
yeah, exactly.
Expecting
like we just
great news
that.
coming into Monday, so it was kind of like, what the hell is going on?
Yeah, and the thing that's really the most interesting to me is the delivery by which the SEC chose to do this, right? Like, they dropped like a salacious quote tweet. It was sort of like, we're running a fucking unlicensed securities, bro.
I saw that. That was incredible PR by SEC.
No,
I was like, that belongs on a t-shirt.
It honestly sounds like the SEC went to some like middle school or like Gary Gensler's nephew, or be like, hey, any of you guys want to be our social media consultant? Like Gary needs some social media clout, because like the way that they did this is more like TMZ than it is a proper government agency. So we got the initial sell-off, which no doubt came from insiders either at the SEC or Binance. My only question about that is like, how much volume do you need to print on Binance to get a call the night before to warn you of non-public securities regulation actions that are coming down the pipe? Because like people clearly knew and clearly front ran that. And then you had the extra sell-off that came when they actually dropped the tweet. It was it's like a 5% drop in one day. And we can go through the details of the Binance exchange, but like, to be very blunt, there's no new information in there. And because you remember, like, the CFTC put out almost the exact allegations previously, in terms of like the operations that were going on. And like, if we go through a list of the things that the SEC said was happening, like, first and foremost, the crux of their lawsuit basically is that Binance was selling in the secondary markets unregistered securities. And they basically went after sort of the top volume crypto names that are not Bitcoin and Ethereum, because they didn't want that smoke. But like Solana, Cardano, BNB, BUSD, which is a stable coin, fucking by the way, all claim to be securities. Aside from that, they also put out some sort of like alleged behavior that is still shitty, but also stuff that the market has known about. And you either believe it or you don't. But like, all this stuff about BAM Trading, which is CZ's fully owned subsidiary that basically is like Alameda to FTX style market maker. We knew about that. The market's long known that Binance and Huobi and a lot of the Asian exchanges, a lot of those volumes are trumped up, and a lot of those volumes are a result of wash trading back and forth. So it's like, okay, it sucks. It's really shitty, but it's not new information. And then the allegations of commingling funds also sucks if it's true, but it's not a new allegation either. Mm-hmm. So really what it comes down to is like, the only thing that's changed is that the SEC is putting together a formal lawsuit. The salacious material is mostly, I think, just like stuff to get social media clout, drum up a little fun. But really the crux of their argument is, did Binance engage, or Binance US particularly, engage in selling unlicensed securities? And if the SEC wins, which will take years to go through and likely will involve multiple lawsuits,
go on for years probably.
They shut down Binance US, which is 2% of Binance's total volumes, and negative P&L generator for the firm. So they're actually, if you're a shareholder in Binance, you're actually probably happy that they shut down this project, because it's probably accretive to total value for the company. I don't know. That's my like very, very, very high level interpretation of what happened with the the SEC with regards to Binance.
Yes, I mean,
Yeah, I
a
think
lot of that's. Go ahead, Matt.
No, I was going to say that they're also trying to freeze Binance US in particular's assets. The SEC are going after that to kind of ring fence them. So, I mean, that's going to have impacts on their operations anyway. So if that actually gets put through court and approved, right, then... So actually, it's a small portion of the pie. They might be better off just shutting up the shop anyway. I don't see why they would keep it, especially if it's losing money anyway.
Yeah. And once again, like if you're a customer and you're on Binance US, none of this stuff is new, right? You knew that Binance was accused of doing all this stuff. You were running the risk intentionally of doing so. I don't think that I have pity for people that, have their assets sitting on, if you had your assets on Coinbase and you found out they were engaging in like massive fraud, that's new information and that, kind of sucks. But like, if you got your money on Binance, you knew who Binance was and what they were doing. You chose to either agree with the allegations or to be like, no, there's no way CZ could have done that. But this isn't new information for anybody.
It's just more of a formality, which I guess kind of translates into the price action, right? Because I know when we were going to discuss them before the show, you saw that price decline, but then there was a rebound shortly after.
Well, so I think partly that rebound came as well because Binance revealed their proof of reserve chain as well. Just in time, right? Here you go, guys. Reserves are still good. Now, obviously, that doesn't specifically... I mean, they lost their auditor as well, so you have to take that with whatever pinch of salt. I mean, I actually believe it's legit. There's no reason not to. And people can actually go in and verify on the Merkle tree where their assets are. But, I think that was great timing by CZ for a start. Like, I think any mistakes they did make in the past, hopefully they're not stupid enough to still be doing them, given what's happening with FTX. So if there's some evidence that it did happen, hopefully they've resolved that. And like Carl said, the CFTC allegations were already out there. There's a suit going on for that anyway. So it's not new information and they'll pay fines for it. Happens to banks all the time. Some people do something shitty at a bank, they get a fine, slap on the wrist, you move on. It's no different, it's crypto, same thing.
Yeah, I direct your attention towards HSBC, JP Morgan, Wells Fargo, right? Like Wells Fargo is widely regarded as being insert any bank, right? All of these banks have paid fines to the regulator in excess of Binance's total, net worth at the moment, and they move on and they do their thing. So I'm not absolving Binance of objectively bad business practices. There's a reason why I do not trade on Binance. There's a reason why I choose not to put my assets there. I guess the thing that I am saying is that I don't think it's as bad of an event for crypto because it's sort of like arguing to a Democrat or a Republican about why their political beliefs are wrong. It's like you either are pro Binance or you're against Binance, and this lawsuit really just sort of like entrenches people's already outstanding beliefs about the state of Binance's integrity in the market. End of story. Let's just move on.
Yeah, I wonder how it's going to be treated by just the general population. Obviously, that aren't as plugged into this. They might that obviously people that are very deeply involved in the crypto markets weren't surprised by it, but maybe folks that aren't and they see Gary Gensler's really cool quotes about we're fucking learning an unlicensed exchange, bro. They're like, oh my god, this is crazy.
The weird thing though is if you look at the responses on Twitter to anything that Gary puts out, it's like I don't even understand why he tries anymore, right? Like if I were him, I would just block comments.
I love it.
It's sort of absurd. He gets dunked on relentlessly on social
media. Do you guys remember growing up watching television and seeing these like state or government sponsored information for kids, like whether it's like just like government's trying to be cool to relate to kids. Yeah, it's like I literally honestly like Gary Gensler's face on one of those. It's like it's so.
Hi kids, I'm Gary Gensler.
yeah, but to counter that though, the Coinbase I think has done a pretty good job in marketing their response and rebuttal. I know you shared the Coinbase response to that. They had a pretty good infographic just showing about that they've gone to the SEC like 30 times asking for regulatory clarity. That none of this is new. So it's like Coinbase seems like they really have their act together. So I think it'll be interesting to see how the rebuttal to SEC's lawsuit is going to turn out.
Yeah, I think and the Coinbase one, if we kind of go back to that, really kind of comes down to two things. The first is that the SEC claims that by selling unlicensed securities, they're in violation of securities law and running an unregistered exchange. Exact same premise as the Binance one. The other thing that they're doing is they're going after Coinbase for basically its staking and lending things that they were planning on launching, which is funny because the only reason that the SEC knows about that is because Coinbase, which has not launched these products, went to the SEC and said, hey, we'd like for you to regulate this. We want to make sure that this is like above board and within the constructs of the law. Can you give us some guidance? And they're like, no, why don't you guys just, come up with what you think is fair guidance and then come back to us? They're like, okay, cool. They did that. They spent several $1 million and engaged with several top securities law firms in the country and came back and they're like, hey, actually, we're just going to go dark on you and prepare for a Wells notice shortly. So it's like totally bad faith. I am fully expecting the courts, as they have done in previous instances of this, to push back on the SEC. So I don't expect the SEC to win this case. I think it kind of flies in the face of what most general consensus securities law people think with regards to the selling of sort of decentralized secondary assets. And most importantly, I think this is the other key thing to watch, is that the judge in the Ripple case, right, which is, spoken against the SEC and is on the verge of what most people suspect is going to be either a settlement or a victory for Ripple, is in the same Manhattan court as the judge who has recently been assigned to the Coinbase case.
Yeah.
And so this junior judge that's on the Coinbase case basically is in the exact same court as the other one. They generally tend to follow each other's guidance, use that as precedence for doing other stuff. I would suspect the key thing to watch here is basically what happens in the Ripple case. Because that's going to have huge impacts in terms of the Binance and the Coinbase case, in terms of unlicensed securities venues.
Canary in the coal mine.
Yeah. So that's the big one. I'd expect any news coming out of the Ripple case to massively move markets up or down. That's probably the last big overhang in the market right now.
Yeah. Can you imagine being that judge who's only been a judge for 6 months, is handed this incredibly high profile case? Like, whoa.
That's why you become a judge, man.
Yeah, I guess so. Yeah,
I think you're right though, Rob. The Coinbase have certainly handled that from a PR perspective very well. I've actually been listening to some. I think Brian Armstrong was on Bloomberg the other day, multiple appearances, and in one interview he said something great, which I kind of think summarizes a lot of the difficulties with regulating some of the cryptos without guidance. And he was saying if there's no common enterprise or centralized entity behind the thing, then who publishes disclosures to the SEC? And these are questions they legitimately ask them, well, is it really a security if this thing just runs autonomously, right? It's decentralized. The purpose of it, who actually registers with you and then provides disclosures for upcoming changes in the protocol, and they just gave nothing. So and this is why people want guidance, because it isn't that straightforward.
Yeah.
And I think we'll talk about some of the regulations coming from the house or pipeline shortly. But that was one thing. I think it might have been Emma's as well. This was 2021. They were trying to get an ICO offering. That in itself could be a security, right? But doesn't mean the underlying token is a security. So they wanted a differentiation to the Securities Act that specifically says that the act of an ICO or issuance of a token doesn't make it a security upfront. So some of these things kind of make a lot of sense.
What's funny though is you're directly quoting Gary Gensler from 2018,
Said the
on a
same
video of him teaching his MIT blockchain course, where he's basically said if it's not an ICO, it's not going to be a security, and therefore 70% of the market is not a security. There's also been some fun things going on, whereby they've unearthed people with receipts too, by the way, like for a former MIT classmate, so on and so forth. Or an MIT student basically talks about how Gary Gensler was close with CZ, made introductions, was very involved with Binance, and sort of lobbied to be a Binance advisor at one point in time in his career. Like there's all sorts of sort of entanglements coming on here that I think belie some less than forthright activity from the SEC.
That's right. CZ and Gensler had gotten lunch in Japan at some point, pre Gensler becoming chair of the SEC, and Gensler actually offered to be an informal advisor to Binance previously. So I know the lawyers at Binance are having a field day with some kind of information.
Yeah, I think. If I had to force rank sort of the quality of PR responses as a result of this, I would actually put Coinbase head and shoulders above everybody. They've done a fantastic job. Binance below that, and then the SEC. It's like some crude approximation of a PR effort, put together by government bureaucrats and no doubt Gensler's like 14-year-old nephew. Or the equivalent of that. So it's like, I don't think they're going to win that. I don't think they have the funds or the acumen to win like the court of, public opinion on this. It's going to be a tough slog for the SEC, which is, I think, sort of like one of the things is, if anything, they're just sort of delaying the inevitable, in the sense that they're kicking the can down the road by tying all these places up with litigation. I don't think the SEC has the resources to fully fight these and win these, and I don't think the SEC has the resources to fight on all of the different fronts that will no doubt come to them. Because you've got to imagine, you've got the, Cardano blockchain, which has significant resources. Charles Hoskinson himself is worth like $1 billion. You've got the Solana team. Like, all these guys have money to devote to fighting an existential threat against their ability to exist. So really, do they just kind of like open themselves up to a multi-front war on the legal front? It's going to be really difficult to actually enforce and win all these cases.
Part of me wonders if maybe that's not even the end game for the SEC. Like, what if they are also just like hedging? So, for example, they don't want to put through or allow something to happen and then there be some type of fraud and then they get egg on their face. So by default are like fighting everything, then if anything blows up, they can go, hey, we tried to stop this, guys. So maybe it's not even about like, even if they have the crappiest case in the world, the whole point is just for them to like say, I reject this, so that if something does bad happen, they can go, hey guys, we're regulators, we're trying to protect you guys, we tried our best. It's like,
listen, there could be any number of ways in here. Another angle basically is trying to mitigate the effect of public blockchain so that we can introduce basically FedCoin, which,
CBDC.
As everyone knows, the federal government always does a better job producing technology than
look at their Twitter.
The free market. Exactly. We're doing well over here. So there's a number of different angles. I don't know exactly what the end game is. What I do know is that this isn't going to be a quickly resolved issue, and this will kind of be here for a while until we do get actual like regulation from Congress, which ta-da!
It's a good segue. Wow.
Yeah, we're actually getting some really. I try.
That was smooth.
Yeah, we've got some really interesting stuff coming out. Senator McHenry, who is a Republican on the Congressman McHenry, who is a Republican on the Financial Committee in the House of Representatives, just introduced a new bill. And if you don't know who Senator, or not Senator, I keep on, who Congressman McHenry is, I invite you to Google him. And there's actually a fantastic clip of him taking Gary Gensler to task just like a month ago when Gary Gensler went to Congress to testify, where he asked Gary Gensler explicitly to say whether or not Ethereum was a security, and Gary Gensler would not respond. It was maybe one of the best interchanges of that entire day. Point being, actually does a fantastic job in my mind of kind of like going through what would classify as sort of a security and how you might regulate that. And I guess the TLDR really is that a coin would neither definitively be a security or a commodity immutably over the course of its lifetime, but rather, depending on what it was doing at the time and the level of decentralization, could be conceived as either or, and any security has the potential to become a commodity. So like, if we unpack exactly what that means effectively, is like, if you have a basically pre-production mint of coins that's given to insiders and VCs, etc., those will be registered as securities. Right? And that's not super
makes sense,
confrontational. Like, you know, in the same way that like when we raised our startup round, we did so like we had to file it as a security because, you know, it is a security. And the people that invested needed to meet criteria, so on and so forth. You know, you got to pay a little bit of extra legal bills, and you can talk about the validity of that. But effectively, you know, it's a time-honored, you know, practice. It's not, you know, the worst thing in the world. The other thing that does is that has basically the implementation of lockup periods, and I actually think this is a very good thing as well, because what we saw a lot back in like the 2020, 2021 bull run was VCs funding projects. And then using retail liquidity to take massive profits. And they made hundreds of millions of dollars off of projects which have gone nowhere in the interim. So it's sort of like one of these things where I actually think it's great to have some laws around this and a lockup period that prevents people from instantaneously taking profit and dumping securities onto retail investors. I guess on the flip side, once those lockup periods are done, and once the blockchain can sort of show that it is sufficiently decentralized, then those tokens traded on secondary markets are effectively commodities. As Matt said, like, you don't really have a central organization who's going to file like the 10Ks and all that sort of stuff and put together, when you just have a decentralized application running. To me, that's quite sensible. And obviously there's some nuances. The bill is in sort of like early stages, but I do like the approach. I think it's nice in that it fits within sort of existing securities laws. It's not a massive, redesign or reinvention of the wheel. But at the same time, it provides a fairly straightforward and sensible path to, regulating both the tokens as well as the venues that allow for them to be traded.
Well, what does it do for the venue side then? So I actually haven't read this one. I was referring to a different one earlier. Where they actually physically want to make amendments to the Securities and Exchange Act 1933 and the Investor Act as well. So where they would carve out like the ICO piece effectively to say something can be not a commodity later effectively. But it sounds like there's some similarities, so maybe they're trying to merge the two. Because I think this is kind of an old one I read, and you said this is brand new. So what does this do then for the actual exchanges too? How does that it just provides clarity on what they can then trade. Does it specifically say anything about brokers or?
Yeah, so the idea is there's going to be like what's called an alternative trading system, which is basically like an exchange that sells ICO like or security like, and they need to register with the SEC.
Got it.
Right. If you wanted to trade secondary markets and stable coins, then you would register with the CFTC. So, for example, if Coinbase were to offer ICO type of like investments, that portion of their exchange would need to register with the SEC, but everything else would be regulated and registered with the CFTC, which to me is quite sensible. And to be honest, that's exactly, if you listen to like the interviews that they've asked for with Coinbase, what they basically said is we have a securities broker dealer license. It is currently dormant. We'd love to activate it, and we think there's a large market for selling securities type tokens, ICO style type of events, in a regulated way, and we'd love to do that. Everything else, including stable coins, Ethereum, Bitcoin, fully decentralized tokens, we think should be registered with the CFTC and governed thusly.
You see, the interesting thing with that is they could then start offering like actual securities as well. So like securitized bonds, for instance, directly.
Yes.
Tokens that you could buy. I think that would be massive for everyone. Like, you just get access to buy. Like, it's not super hard. You can go to Treasury Direct, say, and buy a bond, but there's still some process to go through. If you just go to Coinbase account and buy it, and know that you own the physical government, AAA rated, excluding last week, where it got downgraded, but always, never default US government bonds. That's great. That's big.
I think that if that happened, you'd see a massive bid for Ethereum block space, because I think you'd find most assets would find it easier to tokenize in some way, at least for retail. You're still going to have large pension funds and everything like that that's still going to buy things the old way, but generally speaking, I'd imagine most retail or retail-like experiences would be mostly tokenized and done over a place like Coinbase. Yeah, and then you could basically have people like BlackRock acting as an intermediary, where they would actually buy and custody the assets, tokenize them, and then sell them on something like Coinbase. It's kind of a no-brainer, and from a technology perspective, it's a massive win, and from a retail investment perspective, it's also a massive win. It just takes a little bit of like regulatory oversight to get that done.
And so that's really interesting. When I think about tokenization of assets, so if I'm summarizing what you guys were discussing, so it's like, as you understand it, obviously you're not legal experts, so like if there was, let's say,
not financial advice, not legal advice,
not financial advice, not legal advice. Two mottos to live by. So let's say there's a bond issuance, and there is the tokenization, the initial tokenization of a pool of bonds. That initial tokenization and distribution would be deemed as a security. But wouldn't any other subsequent trading also be deemed as a security? I mean, I realize that maybe the tokenization itself is that'd be registered securities dealer, with the SEC, so they're allowed to then provide that. And then like where it could be offered depends on what the security is. So if it's government bond, for instance, they're exempt securities, so they don't have to register. They could issue new stuff. So and I can buy that as a person in the US. So I could go on Treasury Direct now and buy them at will, effectively. I don't have to disclose or register anything, right?
Yeah, but you're right. Like securitizing them, or rather, like wrapping them in a token, doesn't magically make them not securities.
Right.
It just makes it easier to distribute them and generate partial, fractional shares for retail investors, which is beautiful. But you'd still need a securities license to market them, sell them, etc. Which I think is exactly the right thing to do. You still want to make sure there's order in the market, that the rule of law, still protects investors. And the key here is protecting investors rather than protecting, special interests. But the point is, like, it's a huge technological win, because it makes it easier to provide these types of packages and
Massively.
to make them available, right? And there's a huge trend for this, like, real world asset tokenization. So
Yeah.
imagine, like commercial real estate, even like residential real estate investing, a number of different things like could effectively just be tokenized. It doesn't change the underlying nature of the asset. It just makes it easier to, package them, custody them, warehouse them. There's a blockchain sort of immutable record of asset ownership. It's quite better than a lot of the systems where you literally have custodian banks holding on to sheets of paper, right?
Yeah.
Like, so it's not a bad outcome.
Yeah. The thing that I'm going to be really looking for as well is just change any potential, because I think a fallout effect of a lot of this regulation, which has to happen, and I think it's going to take a while for it to clarify, is also around how individual investors can have access to these markets, right? Like right now, you have to be an accredited investor or a qualified purchaser often on the regulatory side. And even if you do meet those hurdles, which are pretty high for the average investor, the investment minimums in a lot of these to gain access is huge. You have like $1 million investment minimum or something, and like how many people can actually access that? So one, like the rules in place right now through tokenization, allowing more like fractional ownership of these things, which can reduce the investment minimum from $1 million to $5,000 or even less. But then there also has to be some regulatory changes allowing individual investors access to these securities, right? Because I feel like a lot of times individual investors get starved. They're not able to access private equity and real estate in some other ways in an affordable way. I mean, the costs on interval funds and other ways that people can access are way, way higher than what institutions pay. And I think there's can be some real value there.
I fundamentally agree with that statement. It makes you wonder often if the existing framework of investor protections is really more to keep good investments scarce for the average person, more so than it is to protect investors, right? Like, and who's to argue that having a certain net worth makes you qualified to make an investment, right? Like,
I can vouch that I'm terrible at investing and I can still qualify. So I'm a prime example.
Yeah, right. And on the flip side, let's say you're just a really intelligent and motivated person and you do your research and you understand all the aspects of the security, but you happen to fall under, the private investment minimums or the public sort of certified investor, minimums. What do you do then, right? So I think it's useful to take a look at that. A man can dream. The first incremental step in my book that gets us a lot of the way there is just having some clarity around, the crypto market and understanding how things get registered. As much as I rail against, Gary Gensler, I don't not want regulation. I think regulation is really important. It's a central thesis for why we created, DeepQ Digitals. We wanted to have a place where you could have, a fully compliant and sort of like adult in the room approach to accessing the crypto market. I just think that rather than having bureaucrats fight over, land grabs to see who gets more budget and who gets to control what piece of the pie, let's just get something sensible out there and let the market figure it out.
Yeah, lot of work to be done over there on the regulatory side. We'll see how it shakes out. I do like Patrick McHenry though. He seems like has a good head on his shoulders.
Yeah, any guy that wears a bow tie, right? I mean, he's classy.
I'm more of an ascot man myself personally.
Well, I mean, I think he's from the South, like Virginia or something like that. So yeah. If you were the representative from the great state of Connecticut, I'd buy ascot.
Love it, boys. You want to? I know we're coming up on a little bit of time, but maybe we can touch on the CPI and just some of your thoughts around what base rates will look like going forward, and how inflation has been looking.
So there's two numbers next week, right? CPI and the FOMC on Wednesday, so the rate decision. So we're currently at a 30% rate hike probability for next week. That's actually up since the start of the week, where it's around 20, pretty low. Some of that's changed given some of the numbers this week. Like there was the core PCE, which was worse than expected. Some higher employment figures came out, and then later this week we had the first one of the unemployment number jobless claims yesterday. So that was the first sign that maybe the labour market there's a forced tightening that could be on the horizon. So that was actually quite a bit higher. That was actually a bullish event for crypto at least. But the interesting thing is with the debt ceiling in particular, remember that literally was just last week. You know, the world was about to collapse last week, and now everyone's fine again. So I think what the fear though after that for markets was, okay, well now there's going to be a crap load of treasury issuances, which then could dominate the market. People like safe investments, and especially at 5 and a bit % yields, like why not just put it in treasuries? So it could suck liquidity out of other riskier assets. So that could leak into crypto. I was actually catching up with some guys from rates. From what has been issued in the T-bill space this week, it's been massively bid and eaten up by big asset money market funds. So that was kind of if they come in and just absorb it, then it's going to be less of an issue. So I think they've just got the capacity to absorb this new issuance. So I really don't see that as a liquidity drain going forward. But they've only done like 200 billion. They're expected to do 4 to 5 this month, with another 500 billion from July to September. So that's a pretty big issuance. And as you know, that's to just replenish the coffers, right? The government treasury account or whatever it's called. General treasury account. So yeah, there's that to think about. But like I said, I generally think the bigger guys, the money market funds, are there to take it in. So should be okay. And then really rate hike. Oh, sorry, yeah, go ahead.
I was going to say, and the money market fund, it's more, and that's just more recycling. Obviously, they have existing Treasury T-bills that are maturing. So,
exactly.
Like, does it sound like it was just like a general churn? Got it. Okay.
Exactly. And some of them might have actually been holding off. So instead of buying trade, especially with the default, right, you might actually just say, well, I could just hold cash. And one of the things you can do is put that in a reverse repo with the Fed. So you actually get the security like overnight, and then you can just return it. So if you do that on a daily basis, you'll actually get a reasonable yield, close to because it's a securitized loan. Effectively, you get the thing and you own you get the interest effectively. But then they'll just it seems they're taking that cash and now just redeploying it directly into like the 8-week maturity T-bill type thing.
Okay.
So you just get that short-term exposure directly. And then, yeah, of course, what's going to happen with the Fed as well? I haven't thought too much about CPI. I generally just like it's so sticky. What's remaining? We've been focusing more on the FOMC because we think that's going to have the bigger impact. And yeah, I'm not gonna lie, I personally would like them to hold up for a pause. I think it makes sense. We haven't seen a regression in CPI. There have been some problematic things in PCE, right? They've just seen numbers were a bit higher, which is not great to see before an FOMC event, given that that's the number they managed to. But like I said, the start of, I think when all these numbers were coming out, there was like a 50% chance of a rate hike. That then kind of went down to 30 to 20 at the start of this week, and it's slowly been creeping up this week. So we're kind of like getting into this where people are just reassessing that actually there might be a rate hike on the cards. My view is always like they should just get it done. If there's any uncertainty, just do it. Like, why drag it out? Because if the point of waiting actually makes it worse.
Really?
Yeah. Because you're constantly chasing. It really does. So just do it. If you've got one more to do, just like fucking do it. And then pause for like the next couple of months whilst you actually get more data or something.
Do you guys ever watch How I Met Your Mother?
I actually think
I'm like going off on a total random tangent right now, but there's one where what's the name of the guy, the lawyer in the show? I'm forgetting what his name.
Marshall.
Where he can slap is it Barney? Is it?
Yeah. Slap skipping.
That's skimming. And it's like he knows he has the slap coming, but he doesn't know when he's going to get the slap, and it's just torturing. Like when you're hearing that talking about the 25 bip of possible rate hike, that's the image that was coming to my mind. It's like I might slap.
Oh, for sure. Slap skimming is a real phenomena. And to be honest, I'd rather just get slapped now and call it a day. I think the market definitely, I think, would take a 25 bip hike plus reassessment of the dot plots,
Yeah,
lower.
that's a great point. We get the dot plots this sprint.
As being a massive win. And I would actually think that the market would rally more off of a 25 basis point hike this week plus a reassessment of the dot plots indicating, a pause than they would, we're going to pause temporarily, but we may or may not slap you in the July FOMC meeting. Deal with it.
Yeah.
So that's what the dot plots will be really interesting. And like there's two other things that you got to be cognizant of. Like the 2s, 10s yield curve has never been this inverted since the SVB collapse.
Wow.
And the more they keep pushing the interest rates higher, right, the more that's going to get inverted. And that you've had people in various CEO positions saying, look, this is now a problem for me funding, so I'm laying off people. And all of these things kind of lag in to the point where you just don't see the numbers. So I respect the fact for a pause, but I'd rather they just say, look, there's going to be one more. And not at the minute that all the dots say they're kind of done. If there's a revision up and they don't just do it now, I'm like, it just seems like a missed opportunity.
To be
and anyway, and on that note, with the 2s, 10s yield curve, like that could add some, we've recently just had this massive banking crisis. Everyone thinks it's over now. We've got the bank term funding program, so great, but that doesn't really solve the issue of they're going to take losses on using that facility. Still, there might not be the full realized loss up front of just selling the asset into the market at mark to market, but there are still going to be losses. So I just think there's some other stuff there that they're cognizant of, which could help them not push as fast into any more hikes as well. Although I would love it if they just did it, just got it over with.
I got a Peloton in my office, and one of my favorite instructors, Emma Lovewell, has a quote. Yeah, it's fancy. Circa 2020 fancy. Anyway. Like, if you keep sweeping everything under the rug, you don't get a clean room. You just get a lumpy ass rug. So this is how I feel about what the Fed is doing with banks. Like, listen, guys, we have this under control. Do not look at how lumpy our fucking rug is over here. and it's gonna hit. Like, it's inevitable. So I'd rather them do it in the same way that Matt made the argument earlier in the summer, where they were thinking about pausing. Of why don't they just do a 50 bip hike and then be done with it, right? Now 2 hikes later, let's just do a fucking 25 bip hike, get it done with. It will still cause the intended effect. We are starting to see things really shake. Residential real estate, fucking new mortgages are on a massive decline. We're starting to see used cars go down in value quite precipitously.
I mean, consumer savings have gone down so much.
Yeah, no,
so that was the surprise with the PCs. So the spending went up more than expected considerably, but the savings massively went down, right? Mm-hmm. And that was a real shock as to why the PC number was actually higher than expected last month.
Yang, who's been on our show a number of times, had a great quote in his newsletter, which is the American consumer will keep spending until the last credit card gets declined.
God bless America.
Exactly, we're hard to tap out. And so I think that the number is not to watch is not the amount that we are spending, but more so the diminishment of savings and the increased reliance on consumer credit, because eventually that runs out, and then what do you have, right? So it's going to be we're starting to see cracks. It's only a matter of time. As Matt said, these are all sort of lagging indicators. So if you're going to do it, get it over with, because that way we get to the resolution faster rather than drawing it out over a slow period of time and actually seeing people have diminished quality of life as a result of some of these economic hardships. Because the sad part is these are people's lives that we're dealing with, and so if we're going to do it, like get the pain over quickly.
Yeah.
I think the fact will be we'll just have a pause this session. That's my guess anyway. So will be a pause and we'll get the dot plots. And we'll see what they're thinking.
I know we have to jump in a little bit, but I'm wondering if maybe this is kind of like you guys study rates a lot, especially you, Matt. Do you think this is just like a little bit of risk aversion by the Federal Reserves, that they're reluctant to just raise rates and then like draw a line in the sand? Okay, we're done now because something might happen. And they might egg on their face.
Hit the soft landing, right? Like you get a lot of. Well, just think if they. Like I say, get it done, not bang. They should have just got 5% immediately. It doesn't work like that. That would just throw everything out of whack. It's too much. So you need some. It needs to be gradual. But the point is, it's just the rate at which it's coming down has really not gone at the same rate at which they've increased in any proportion. So that's kind of why there's no argument for maybe you could have just done it faster if you really wanted to tackle it sooner, to show you're really serious about it, and then it would have to factor into people's business planning much quicker. Like if you give people leeway, they're like, "Oh, I'll just keep borrowing." But if you're like, "No, look, dude, you're gonna have big bills now. You've got to readjust." But the reason they do that is because that's massively disruptive. So you've got this tight balance to play, and of course, like it leads to job losses ultimately. So the Fed will never say we want people to lose their job, because they don't. They want maximum employment, but to reduce spending and therefore try and take inflation down as part of it. And the two kind of go. And I remember seeing what's his name in Congress get grilled on this, like them just going after him saying you're trying to make people lose their jobs, and he's like, no, but obviously the result of that would probably be lower inflation, which is part of our mandate. So, he had a very difficult time entering it. It was tricky to watch.
Politics. That's why I'll never get into politics.
It's true, and there's it's not a good thing to say out loud.
It's like when unemployment numbers go up, market rallies, right? It's one of those things.
Yeah.
Maybe they don't hike. That's good for risk assets. And then market rallies. Yeah. So it's tricky.
Super tricky. You guys, this is great. Enjoyed the early morning chat. Carlos, hope you enjoy your second round of mushroom invigorating beverages, and Nat, you take care of yourself, sir.
Yeah. Cheers, guys. Appreciate it.
See you later.
Bye.
Cheers.
Bye.